Coming right up, we have FinTech Demo Day Pitch Perfect, Society, Humanity, Part 1, brought to you by Benjamin Buckingham, Chief Product Officer of Identitii. Benjamin, please.
Hi everyone, I'm Ben Buckingham. I lead the product team at Identitii, and today I'm going to be talking about how we can reverse the decline in correspondent banking and therefore improve financial inclusion. A little bit about Identitii. So we are a Sydney-based fintech company that is looking to solve some of the big challenges that exist in correspondent banking. And we really started off this journey back in 2016 when we won the Intertribe Industry Challenge on compliance. And off the back of that, ran a pilot with Swift and 7 large institutions. We're also an alumni of the MasterCard Start Path program and also the Accenture FinTech Innovation Lab. And we have the pleasure of being invited to speak today off the back of winning the Pitch Perfect competition at Sibos in the Society and Humanities division. Today, I'm going to be covering off one of the unfortunate trends that's happening in correspondent banking, which is this concept of de-risking. De-risking involves the loss of correspondent banking relationships for smaller banks, and it's happening particularly in higher risk markets. One of the things that we're seeing here is that the overall number of correspondent banking relationships are declining, and they've been in decline for a number of years. This decline is impacting some countries more than others. We're seeing a lot of losses in Africa, in the Middle East, in parts of Asia, South in the Caribbean, and the impact of that is it has a disproportionate effect on these emerging economies, particularly enabling SMEs and small businesses to access the financial system and starting to shift people outside of the conventional financial ecosystem. So that's really part of the problem statement for us today is how do we use technology to be able to solve some of these bigger challenges. The challenge and the causes of de-risking are complicated. We think there's a few key drivers here. One is that the AML practices across smaller institutions lack standardization, and that means that for a large correspondent bank, they need to invest more time and more resources in order to be able to meet their obligations to serve those smaller institutions. And that in turn drives up the cost of compliance. We understand that for an international payment, the cost profile can be 60 to 80% driven by compliance processes that exist within the institution. It's part of what's making correspondent banking less competitive in the overall landscape where people move to newer types of payment rails. And the underlying causes of that in itself are complicated as well. But we think there's a couple of key drivers here that relate to some of the technology challenges that are driving that and why it's hard to solve. One of them is that information sharing to support financial crime compliance processes between different institutions is difficult. And it's difficult because of regulatory regimes. It's difficult because of data sovereignty requirements. It's difficult because the technology mechanisms to be able to do it are difficult and to be able to get it into institutions' applications. We also think that there's a strong place in the world for KYC utilities and other centralized sources of data, but we don't think it works for all types of data. We don't think it works for sensitive data, for investigation-related data, some of which requires bilateral information sharing to happen and a more distributed approach. And then one of the other challenges that we see is that banks are encumbered by legacy technology. We see that in many aspects of the way in which they can create new products and services. And one of the implications of that is the data that's needed for some of the critical processes across an institution can be siloed, difficult to access and difficult to expose. And so again, some of these are some of the thematics that we're looking at trying to solve using our platform. So at its crux, when we're talking about international payments and we're talking about the compliance processes around correspondent banking relationships, one of the key things here is that a bank's KYC sphere only extends to its own customers. Banks can't see into the KYC of their counterparties. There's always a missing link in the transaction, either on the beneficiary side or the originator side. And that causes challenges for them in terms of being able to correctly identify financial crime compliance. And really where we think the industry should be going and is going is to start to expand that remit of intelligence, to start expanding that ability to see into other institutions and be able to share more information between different institutions. And we think about this in terms of the KYCC sphere. We're not suggesting that banks need to start doing KYCC on their counterparties, start doing KYC processes on customers, but we think that there is a place in the industry to be able to provide more transparency on a counterparty's customers, to make compliance processes easier, and to feed that data into transaction monitoring systems, into sanction screening systems, into due diligence processes to make financial crime compliance operations more effective and therefore help to impact that correspondent banking decline. And so our platform is called Overlay Plus. The solution is called Counterparty Assurance. And what it enables is for institutions to access critical data to support some of these key compliance processes. We provide the ability for banks to do RFIs for payment investigations, so that they have all of the information that they need to be able to do an investigation, particularly things like purpose of transaction, supporting documentation for transactions. We support them to also collect more information and access more information about KYCCs, so providing more transparency in that outer layer. And then also to support things like information requests for KYC onboarding. So whilst KYC utilities provide a lot of the data, sensitive data can't necessarily go into those utilities, things like director's passport information. So we provide mechanisms for that type of data exchange. And our platform has three key features that help us to solve some of these challenges. The first is looking at information requests. So how do we streamline the way that information is shared between different teams? The second is a counterparty store, and I'll go into a bit of detail there, but it's about providing the ability for investigators to access more of the data about their counterparties to stop RFIs altogether. And then the last component, which I think is potentially the most interesting part of the platform, is moving into validation and credentialing of KYC and KYCC data within the global correspondent banking ecosystem. So talking through a bit more on the information request side. So if there's a payment investigation, a payment exception, if there's a sanction screening hit, one of the big challenges is that a number of RFIs happen in the industry. And there's quite a few initiatives that are helping to solve this problem. Swift's brought out G-Case, for example, over the Swift network. But as we know, there's a variety of payment rails now, and information sharing internally within an institution can be just as complicated as sharing it externally. And so we streamline the way in which that happens. The second part of this is called the counterparty store. And that's where we're storing information about counterparties. So this is originators and beneficiaries to transactions, so that we can collect information that can be used to stop RFIs. Previous RFI information, underlying transaction information, information that might come in from third-party registries as well, and provide this as a source of intelligence for financial crime compliance teams to be able to leverage. And the last component is the validation and credentialing side. And this is where we leverage our partners like Deloitte to be able to do attestation, validation, and credentialing of some of that underlying data, to be able to go into a high-risk market and validate the AML processes of an institution, and then use a digital checklist that has attestations about underlying data and processes within those institutions to help drive some of that AML standardization that I mentioned as one of the problems. The platform has a variety of different tools to help at different levels of the process across both information requests, KYCC and KYC. We really look to plug into existing processes within an institution and not necessarily to replace the underlying architecture. So we're looking to sit over the top and provide data into KYC systems, into transaction monitoring systems, and into sanction screening tools. So the outcome of this for us is all about balancing inclusion and risk by providing tools to help financial crime compliance teams to make better decisions, to reduce the cost of compliance, and therefore to improve some of the de-risking that's happening and to promote financial inclusion in correspondent banking. Thank you very much.